This is Bloomberg Businessweek. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news. The Bloomberg Businessweek podcast with Carol Massar and Tim Stenovec from Bloomberg Radio.
Should we talk about crypto?
Yeah, I'm taking a look at Bitcoin right now, and haven't seen a rally like this in quite some time. It's up 7.4% just today, Carol.
Yeah, I'm looking at the whole crypto monitor on the Bloomberg. Like, it's all up. Ethereum's up about 5.5%.
Which makes no sense. If this is about Bitcoin, then why is every other crypto higher?
I'm sorry, Tim Stenovec, you want sense when it comes to the crypto market?
Well, maybe Hannah Miller can help us make sense.
I hope so, because we did have a 3-judge appeals panel in Washington today overturning a decision by the SEC to block a spot-based Bitcoin ETF from Grayscale.
Does that make sense to you?
I always feel like I need an interpreter when it comes to all things crypto. We do get an assist, though, from Hannah Miller. She's digital currencies and venture capital reporter for Bloomberg News, and she's with us on the phone in San Francisco. Hannah, take it away. So, big decision, significant help.
Yeah, so this is a significant decision for the industry. You know, this has been a very drawn-out battle. This has lasted years. And it is paving the way for the approval of a spot Bitcoin ETF in the U.S. But that is not definitive. There's still a lot of stuff that needs to happen. There still needs to be an approval process from the SEC. So I've been talking to people in the industry. It's been a lot of cautious optimism about what's happening here.
Okay, forgive the question, Hannah. But why do we need a spot Bitcoin ETF when Bitcoin is so easy to buy?
Oh, my God, they're banging at the doors, Tim, the crypto folks.
No, that is a great question. So this spot Bitcoin ETF allows people to have exposure to Bitcoin without actually buying the cryptocurrency. So for people who are, a little nervous about Bitcoin, especially amid all of the regulatory uncertainty happening here, this is a way to kind of get a taste of the action without, going all in. So a lot of people think that this could broaden mainstream adoption among both retail and institutional investors.
So what do you own then?
You have an ETF that's tied to the spot Bitcoin price. You are able to track the market, and they're hoping that the discount between the Grayscale Bitcoin Trust and Bitcoin itself will narrow. With this decision. And we've seen that happen. These two are becoming more closely aligned in price. So, GBTC is up, Bitcoin is up. The industry is celebrating right now.
Sounds like a derivative. I don't want to get too mechanical here because I know we're talking crypto and not necessarily ETFs. This is not ETF IQ, but it's just, again, I question the need for something like this and also the reaction from the entire crypto market.
Yeah, I think the entire crypto market is just looking for some positive news here. I mean, there's been, such entanglement with regulators. There's all these legal battles. This is, a much needed win, even though, there's still a lot of uncertainty about what's going to happen here.
So is there a timeline, a date that's kind of on your radar as to what's next? Yeah,
so we could see an approval as soon as next week.
Okay.
There's this Labor Day deadline. And, that could happen. But again, there are a lot of logistics that need to, play out here. The SEC has to decide how they're going to react to this, if they're going to, file with new reasoning for their rejection or if they're just going to capitulate here. So there's stuff that we still need to watch.
It always
feels
like
a lot of buzz about,
No, go ahead, Hannah.
Oh, there's just also a lot of buzz about Ethereum products, Ethereum ETFs, whether this could help pave the way for those.
I always just feel like whenever there's like a crypto story, Hannah, I don't know, Tim, like it's like, hey, good, but like there's always a lot of buts.
Well, so my but question for Hannah before we go, just in the last minute that we have, does this mean that Chair Gensler is a friend of crypto now?
I wouldn't go that far. I think he's taken a couple of blows here. This is the latest setback. We'll see what happens. But yeah, I think it hasn't been the easiest road as of late for Gensler and the SEC.
All right. Well, it's keeping us on our toes in these dog days of August. That's going to say, that's for sure. Hannah Miller, thank you. She's digital currencies and VC reporter for Bloomberg News, joining us on the phone from San Francisco. You did so much reporting, too, for Crypto IRL.
Yeah.
And so how are you thinking about these
this is something that the industry has wanted to see for a very long time. So it's a huge win for the industry, but I still question is it a product that
I want to see
actually
unicorns
has a huge
flying in the
use?
sky, but does that mean it's a good thing?
Again, it's so easy to buy crypto. You can use PayPal or just pull out your phone and buy it. But
does general investors feel like it's so easy?
I think so.
All right.
Yeah, it's really easy.
I don't know. All right. It's to be continued, that's for sure.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 3 to 6 Eastern. Listen on Bloomberg.com, the iHeartRadio app, and the Bloomberg Business app. Or watch us live on YouTube.
We want to continue a little bit with the HPE story because they are out. We're waiting for HPQ to report. As we said, HPE did pre-announce, so a lot of it was already laid out for investors. Having said that, we do want to get a little bit of some color, if you will, on the quarter, the outlook, and how this particular tech company, well known, around for a long time, kind of fits into our world.
Very pleased to have with us this afternoon Bloomberg Intelligence Senior Technology Analyst Woo-Jin Ho with us on Zoom from BI headquarters in Princeton, New Jersey. So good to have you with us this afternoon. The question I have is what in here was a surprise to you? What's new to you?
Well, I mean, there's really nothing new here. They're pretty much
okay. I guess we're
announced.
Done. Interview's over. I'm just kidding.
they pretty much pre-announced. But if we dig deeper into the numbers, actually, look, what's been white hot not only for HPE but also the rest of the tech sector has been the networking space, and the slight upside into the quarter was the intelligent edge. Right, that segment grew 50% on a year-on-year basis. Where it fell short, however, was on the compute space. There has been some concern that the server space is going to be weak. And they missed by about 3% versus consensus expectation, and that turned out to be true. We're still waiting for the server space to rebound, and it still may take a couple of quarters before we start seeing growth come back here.
In an AI-obsessed world, how do we think about HPE specifically and where they fit in?
Yeah, I mean, they're actually trying to really position themselves very well in AI. Keep in mind that they have this high-performance compute division, which is going to drive some AI. The CEO, Antonio Neri, said at a recent investor briefing that they had about $800 million in orders. So that's a number that I'm really curious to hear on the call. But in the overall picture, they're still growing that AI business, but and also they have to get access to the NVIDIA cards to build these AI clusters for the enterprise. So it's going to take some time for that AI business to be a real business.
What is that AI business? Like, what does it look like? What do customers experience? And how much of it is done? How much of a value creator is HPE? You said,
Sure,
it sounds like a real winner is NVIDIA.
It's potentially, a value creator over the long term. Near term, $800 million in orders in a roughly $40 million revenue base or 29 billion revenue base isn't going to move the needle anytime soon. But there's a couple of things, right? First, the enterprise customers do not have access to these NVIDIA cards where all the clouds are sucking them up. HP can actually come in there and provide as a service provider to build in-house AI systems for these enterprises. That's number one. Number two, HPE over the past several years has been moving over to this as a service business model. And with that, they've actually introduced a new AI large language model service to provide to these customers. So if there are customers who want to build out these large language models, do not have the wherewithal, they can actually rely on HPE. And among all the large enterprise vendors, enterprise IT providers, HPE is very far along relative to someone like a Dell or a Cisco.
Well, just as a reminder that when we speak about AI and the needs and the demands and who are the winners, there's going to be multiple ones. Is that safe to say, Woo-Jin?
Well, right now, the big winner is NVIDIA, as we saw on last week's earning, right?
Right.
And when we think about AI in the early stages and think about AI house being built, the first thing that's going to be built is the plumbing. And NVIDIA is the leader there. One smaller name that I can share is probably Arista Networks, and they provide Ethernet networking. And they're probably going to try to fight the battle where NVIDIA is on the networking side. If you talk about on a services perspective, the hyperscale cloud providers are probably nearer in terms of being revenue generating versus like meaningfully revenue generating relative to some of these enterprise IT guys.
Arista Networks is at 52% this year.
Wow.
Just sharing, yeah.
Woojin, who would be competitors when it comes to AI and where Hewlett Packard Enterprise is really trying to grow?
Well, the one benefit that HPE has is actually their Cray acquisition from several years back, and they've been trying to pivot that towards an AI play. So they know high performance compute really, really well, and they are starting to build out servers for enterprises to drive AI. Now, the one company that is trying to, there are two companies that are trying to move on the server side. One larger company is Dell. They're building out their own AI servers. A smaller company that I can share is Supermicro, and they've been delivering these high performance compute. And if you look at that stock price, I think has tripled over the past year because of they make these AI specific servers.
Yeah, up 218% this year alone. So yeah, it's been on a tear. It's about a almost $14 billion market cap company.
Super micro.
HPE, nicely done. HPE is down about 0.4% in the aftermarket. Can we flip to HPQ? We're waiting for those numbers. It's definitely been outperforming its former sister brother, whatever you want to call it, HPE.
Is it, well, before you get into that, is it typical, Woojin, that these two companies report on the same day? This is surprising to me.
It's all legacy.
So do they always report on the same day?
They do.
Okay. All right, so they're former brother and sister, and they're still kind of related.
Twins.
Yeah.
Twins of So okay, HPQ up about 16%. We used to call this was the old, right? Hewlett Packard. What are you watching out for that one?
Yep. So I'm looking for the rebound on the PC market. It looks as if it's starting to flatten out in the calendar second quarter, their fiscal third quarter, and hopefully they'll talk about signs of a slow but steady recovery. I don't think it's going to go down any further, and I don't think they're going to stick their neck out and talk about growth anytime soon. But stability is where investors want them to be right now.
Does back to school help with PCs?
Well, what had happened over the past couple of quarters was that there was such an influx of PC production build that companies have overbuilt PCs, and there was an inventory correction. So there was a halt on PC sales. Back to school and a return to seasonal demand is going to help. Back to school plus the holidays.
And it looks like HPQ just crossing. I'm just going to throw some numbers at you, Woojin. HP Inc. sees fiscal year adjusted EPS of 323 to 335. Had seen 330 to 350. So it looks like it's bringing in its fiscal year adjusted EPS. Looking at fourth quarter adjusted EPS 85 to 97. The estimate is 94 cents. Third quarter personal systems revenue 8.93 billion. That is better than the estimate of 8.79 billion. And third quarter free cash flow, we're looking at 900 million. Estimate though was for more than $1 billion.
Yeah, and in the after hours shares, at least the knee jerk reaction is lower. Woojin down about 6.5%. What's your immediate reaction?
The reduction in guidance is possibly because of higher mix of PCs, because PCs did better. That means they have lower gross margin. The printing business actually has higher gross margin and operating margins because of the supplies business. So the stability or better PC business is actually an encouraging sign.
It did say, I'm just going to do it our right through real quickly, reducing its full year cash flow and profit outlook, saying a rebound in the market for PCs will take longer than expected. So sounds like a little bit more of the same that we've been expecting. Hey, thank you so much in real time breaking down those earnings with us. Woojin Ho, he's Senior Technology Analyst at Bloomberg Intelligence, joining us from BI headquarters in Princeton. We've been leaning on those guys a lot, heading out to our Princeton Bureau today and our BI team. They are incredible.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 3 to 6 Eastern on Bloomberg Radio, the Bloomberg Business app, and YouTube. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
All right, well, Speaking of shaky ground, out later this week, the double cities issue of Bloomberg Businessweek, where a team of global reporters looked around the world to tell stories happening in all corners of our societies. Among them is one about a fragile real estate boom emerging in Palestinian territories, Tim.
Yeah, one in which Arab Israelis are purchasing luxury homes in Jericho, adding a new dynamic to their complex relationship with other Palestinians and Jewish Israelis. Taking us to the development known as Jericho Gate, we've got Bloomberg News Israel Bureau Chief Ethan Bronner with us on Zoom, along with the editor of Bloomberg Businessweek, Joel Weber, who joins us on the Access line in Massachusetts. So, Joel, take us first into the double cities issue and where Ethan's truly amazing story fits in.
So Jericho happens to be one of the oldest cities in the world. So I thought that was pretty fitting way to build the cities issue. Go to the really old, and then also find ways to talk about some of the new challenges and new innovations and things that we can all be excited about. As we've also discussed right here on this show before, I went to one of the world's most complicated geopolitical situations in Taiwan recently, and the only place in the world that might rival that one is probably where Ethan resides. And so I thought, we can always talk about cities and we can talk about the pandemic, but let's be real and talk about some seriously interesting stuff. And that's what Ethan was able to bring us from a development called Jericho Gate. So Ethan, what's happening?
Hey, Joel. Hi, Tim and Carol. So yes, it is a very complex and interesting situation. I mean, of course, the West Bank is militarily occupied by Israel, and it is no fun to live under occupation. It is a difficult situation for many. But what I learned is that despite that, there has been a Palestinian business class that has decided to build vacation villas with pools for there are several hundred, some thousands of Palestinians who can afford it. And now the complicated thing here is also that there are three kinds of Palestinians involved here: those who live under occupation in the West Bank, those who live in Jerusalem, which is a kind of occupation, but they have special IDs because Israel considers all of Jerusalem its capital. And then there are those who are Israeli Arabs who are citizens of Israel. And all three populations have grown wealthier. I don't want to say wealthy, but wealthier in the last 20 years because Israel has become very, very wealthy compared to what it was a generation ago. And therefore, there is kind of room for vacation homes for people who live nearby. Now, the other thing that's so interesting is that the Israeli Arabs were not really mixing with those of the West Bank for many years. Now they are. And one of the questions the story raises is what that might mean politically in the future.
Can we just take a step back and just talk about the development itself and what's inside the walls and kind of what surrounds it?
Sure. So this is just outside the city of Jericho. And as Joel mentioned, one of the very oldest cities in the world, the lowest city on the planet as well, just near the Dead Sea. And so you have a whole group of Palestinian developers who created villas with walls around them, typically 3 bedrooms, 3 bathrooms with a pool. Pretty big pool, 5 by 10 meters. And these are vacation homes that sell for $250,000, which is a pretty good price in most places for a vacation villa like that. And there is a big development. They're still building it, but the plan is for there to be a couple of 3 or 4 malls, a water park, and other kinds of tourism things. So the idea is to make it a real a place of attraction for people visiting from within Israel, the Palestinian areas, and from outside.
There's an incredible quote in your story. One of the subjects says, Jericho is booming. Despite the checkpoints and occasional war, people can make money here.
That's right. That's right. I mean,
what is the looming threat of war? Describe that.
Look, I mean, there have been there is tension. I mean, nobody wants to live under military occupation, so there are young men who are armed who are go after Israeli soldiers and Israeli settlers, and then the Israeli army comes in and tries to quote unquote restore order from its perspective. So There, in January, there was a shooting at a restaurant where Israelis go, and the Israeli military went into a refugee camp near Jericho Gate and killed 5 guys in the course of trying to restore the situation to the status quo ante. So that's what that means. And at any given time, there have been 2 so-called intifadas, uprisings, in the last 40 years, and there could be another one in theory. And that's what the mayor means, the mayor who said those things. At the same time, there is money to be made because there is a lot of money sloshing around now, partly as a result of Israel's wealth and partly as a result of some savvy business folks who are decided, listen, whatever happens, we're here. And that's the other interesting aspect here, right? That these developers and business people who say, look, whatever happens, we're not going to go. So let's just build and make sure that whatever happens in the end, we have someplace nice to live.
So talk to us about that, the fragile piece that it's all sort of built on, Ethan, because sure, you can build stuff like this and you can develop it, but like underneath it all, as you kind of mentioned here, I mean, there's some real fragility that it's all built on.
That's true. There is increasingly less and less of a chance that there will be an independent Palestinian state. Israel is very powerful and has turned to the right. It has decided mostly that it is not especially interested in helping the creation of a Palestinian state. At the same time, you have millions of Palestinians, several million, who live in the West Bank without full rights. And would not be surprising if they were to rebel again. Now, the situation is that the Israeli military does maintain a sense of order in the place. It isn't so easy to rebel against the Israeli military. But, as you say, it could happen again. At the moment, the kind of occupation that Israel is engaged in has seemed to have kept down any genuine full-time violence as opposed to what has happened in Gaza. We're talking now just in the West Bank. But, until there is some kind of political horizon that makes sense, there's always a risk of violence. And that's what those guys are talking about.
So for the Palestinians who are able to buy these villas, what does it feel like for them? And what do the villas look like?
Well, the villas are beautiful. They're, as I said, 3-bedroom, 3 ensuite bathrooms, tiles, beautiful kitchen appliances, glass sliding doors out to the pool, slip-free tiles around the pool, computer worrying about the pH of the water and so forth. They're gorgeous. The people who go there, it's sort of like they've decided, all these years, all these decades, nothing seems to be going right. But you know what? We have enough money. This is where we live. And we're going to do this. And Jericho has historically been, long history, a place that in winter people go because it's low and warm. And so the idea that it can be your vacation weekend place is very appealing to Palestinians who live in Jerusalem and the West Bank, and again, interestingly, thousands and thousands of Palestinians who are Israeli citizens who are sort of spending their weekends in the West Bank because they can afford to. They can't afford to buy such a property in Israel, which is very, very expensive. And they're culturally, of course, in tune with the people there. So there is this kind of growing intermixing of Israeli Arabs and West Bank Palestinians. And I think it's too early to know because it's only been 5 or some years that this has been happening on a big basis. But I suspect that there could be a political development which would bring leadership, possibly, from Israeli Arabs who go to the West Bank because they know the place they're coming from and they know the country they have to deal with. And they, of course, politically and culturally aligned with the people in the West Bank. But it's very early.
It is early, but Ethan, talk a little bit about the politics though of this. That's really where I want to go and understand how this could have political implications.
And maybe be a stabilizing force, right? To see
that's right.
The movement of this wealth into it.
That's right. So we have, of course, the most right-wing religious government in Israel's history. It is a government under Benjamin Netanyahu that is not dedicated to an independent Palestinian state, trying to limit and possibly annex some of that land. So there's that. Now, internally, in terms of the millions of Palestinians, the 2 million Palestinians who are Israeli citizens and the several million who live in the West Bank, I think the politics of this is that let me step back for 1 second. The region is not an encouraging place to live. If you are an Arab and you look around at Jordan, Lebanon, Syria, Egypt, and you say to yourself, I'm an Israeli Arab. I mean, I'm very unhappy that I don't have political independence. On the other hand, everything around me is maybe far worse. So maybe there will be some kind of accommodation internally by Palestinians internally to somehow come to terms with the Jewish state of Israel. And I say this is because the 2 million Palestinians who are citizens of Israel, on the one hand, of course, they can't. It is a Jewish country, and that is not something easy for them to embrace. On the other hand, the bourgeoisification, the middle classification of Israeli Arabs over the last generation has been remarkable, lightning strong. They all go to university. They are filling Israel's occupations, including high tech. And so on the one hand, it is sort of scarier to be an Israeli Arab than ever. And on the other hand, it is easier to be. And those parallel lines are aspects of Israel that you see all around. Israel is both richer, more advanced, and heading toward weird medieval forces at the same time, all at the same time. And for Israeli Arabs, they're like the canary in the coal mine. What's going to happen to them? We don't know. The other question is, do they view buying property in the West Bank as an insurance policy in case it gets really ugly in Israel?
Right.
I don't know, but some do.
What's fun about, as you guys all know, is that we cover markets and we have investors, business folks, they take risks. Who's the developer who has taken the risk in this? And
yes,
have about a minute. I know you tell a really long, but a really detailed story, which is so rich. But who is this individual who does it? Yeah.
Yes. So the brains behind it is a man named Samir Hulileh, and he's a fascinating guy. I hope those of you listening will read the story, because he's a 65-year-old Palestinian who was in politics and ended up in private enterprise and has this vision. Purchased tens of millions of dollars worth of land from a particular clan, and then started engage 62 separate Palestinian developers to create the villas and so on. So I mean, he's the guy who says in the story, I realized in the end that however this ends up, what's the point of having a flag over a garbage dump? Which was an amazing quote, I thought. He said, we need to resist. We need to build, and that's how we're going to look forward. Politically, we're not going anywhere. We're not going to win on the battlefield right now, but this is what I can contribute, and I was very moved by that.
Yeah, well, we can tell, and it's an incredible story, and I feel like I've said it a million times, that you guys all at Businessweek do this so well. You open a window into the world where people probably don't know what's going on, and you really tell the story with so many details and how it can be potentially a changing force or not. Time will tell. Yeah,
it's a really great piece. I should note it is in the upcoming new Double Cities issue of Bloomberg Businessweek. It's on newsstands later this week. The story, though, already online at Bloomberg.com/Businessweek, Carol, and of course, always on the Bloomberg terminal.
Highly recommend everybody check it out and read it in its entirety, because as we said, it's just really rich in detail and just pretty amazing. Who knew this was going on? Well, Ethan Bronner did. He's Bloomberg News Israel Bureau Chief. We thank him joining us on Zoom. And then, of course, the editor of Bloomberg Businessweek, Joel Weber, joining us on the Access line in Massachusetts. You're listening and watching Bloomberg Radio.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close
That funky music will drive us till the dawn.
on Bloomberg Radio.
All right, everybody. Just under 18 minutes left in today's trading
time flies,
session.
Carol.
It does indeed. It's funny how that works. You know, the clock just keeps going tick, 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 tick. And this is one for the bulls, everybody, because we're holding on to the gains. You just heard from Charlie. We're pretty much at our best levels of the session. You got 1.5% higher on the S&P 500, Tim, and 1.8% higher on the NASDAQ. And then you've got yields down on that softer economic news. So right now, traders are maybe, we talked about this at the top, maybe, the Fed is getting closer to being done. But yeah, I know. Tick, tick,
maybe.
Tick, 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 until we have another point of view.
You've been playing that game for quite a bit of time. Let's see what Nicole Webb, Senior Vice President at the Financial Advisor, at the Registered Investment Advisor, Wealth Enhancement, joining us on Zoom from Plymouth, Minnesota, has to say. Nicole, good to have you with us. How are you?
Hey, I'm doing well today. Thank you.
So does a rally like this have legs? Is it warranted?
I think today has a lot to do with the JOLTS data. Everyone's going to sing the same song there.
I'm glad you said that because I thought it had to do with the JOLTS data too. Finally, you can stay.
I think it's one of those weeks where bad news is good news. We're going to read into this to say, okay, do we have to price in an additional 25 basis points? And only 2 weeks ago, we were looking at shipping costs. We were looking at oil over the last 2 months, and we were going, okay, are we going to have some resurgence of inflation? Are we going to be talking about that, about just kind of additional stickiness in the back half of this year? And so some of the deterioration in jobs is meaningful. And I think you couple that with this pressure on return to work, which is showing a little bit of a nuance from a business perspective of we're not as fearful to lose you as we once were. So if it's a deal breaker for you to come to the office, that's okay with us. There's available workers out there that we'll go grab.
So when you and your team advise and are helping clients, and I understand it's long-term accumulation, everybody has specific investment goals, but what is it that right now in this broader market environment that makes you pull a trigger on something or saying, hey, we know you're in it for the long term, but you might want to think about this, or you might want to think about this. And what would those thises or that's be, if you will?
Yeah, I actually really appreciate you framing the question that way because all too often, we spend a lot of time talking about the risk on, risk off narrative, but that doesn't work the same way for a bank as it does for an individual. When we think about the market today, there's certainly opportunity below the surface. And so if we know or expect, we think we know that we're in a higher for longer environment. And we know that this year had a lot to do with margin expansion. We know last week, NVIDIA was a bit of a look through into what we could expect from the technology sector. If we think about JOLTS data telling us a piece of the duration story, then in a moment like the one we're in right now, there's two things we talk a lot about when it comes to equities, and that's, the 490 other companies we haven't been talking about this year, areas of growth like liquid natural gas, or companies with multiple business lines that aren't leveraged in this environment at all. And then you couple that with the story around opportunities in fixed income outside of just ultra short duration, meaning money market and T-bills, and look at when do we start to incrementally increase that duration exposure? Because rates at the levels they're at today are higher than we would expect the growth rate over the next 10 years to be. And that's when one starts to think about placing some of that extended duration in risk-free assets. So,
well, it's funny that you say that. So is it the net there? Yeah. And I've heard, various folks around the table here in this in this studio say that, you look at what's going on in U.S. Treasury yields and you're right, like that's not so bad. And considering, the reduced risk in going into a U.S. Treasury that's giving you 4 or 5% at this point versus the risks potentially in the equity markets. Is that basically the net there?
Yeah, I also think one has to remember that, volatility in the market is actually extremely profitable for the individual, for the long-term investor. The reinvestment of dividends alone in aggregate makes up a great sum of that total return perspective. And so when we think about the market we're in, there's a couple of trends we think about for the year ahead. We do believe the stickiness of inflation, and that's been a huge win for large cap companies and their ability to pass along pricing to the consumer and not have volume decrease. We expect that trend to continue, but we also believe that we can incrementally be buying into the small cap spectrum, knowing that we've likely reached a price point where the price to entry is very inexpensive comparative to the large cap. And so I think you're going to see a lot of positioning or repositioning in the back half of this year when we come out of lame August. And it's all going to play into the story you're talking about.
You guys still have an expectation, a year-end target of 4,600 on the S&P 500. Here we are close to 4,500 at this point. What does the path between now and December 31st look like?
Yeah, we expect that there is, last week was a bit of a game changer in terms of, expectations around what NVIDIA would provide in terms of a look through into the tech sector. You couple that with, some of the data supporting now that perhaps there isn't another 25 basis point increase yet this year. But at the same time, we do expect there to be a bit of a churning at the surface. This is where we step away a bit from passive investing and think more about being really thoughtful in how we deploy into specific names in the back half. So our expectation of how we get to 4,600 is less in that the top 10 of the cap weighting of the S&P and more of a churn below the surface that is less noticeable. And so all of that to say, a bit of a tighter trading range to get there, probably bouts of volatility in some of the tech sector as you see that true up into the end of the year.
All right. Good to get some time with you, Nicole. Thank you. Nicole Webb, she's Senior VP and Financial Advisor at the Registered Investment Advisor Wealth Enhancement, joining us on Zoom from Plymouth, Minnesota.
Told you. Bad news is good news.
I'm with you because I think as soon as those data points came out, and it was one after another,
it was like,
right?
Vroom, vroom, vroom.
Exactly. And it's just like, well, wait a minute. Maybe the Fed is getting closer to being done.
Maybe.
Like
Ira said, wait till later this week. We're going to get a lot more data.
PCE.
Then jobs.
And jobs. Those are big ones. And then there's still more to come until we get to that September 20th FOMC meeting.
Jay Powell's just like relaxing, enjoying some time at Jackson Hole.
Yeah, I went to the spa at Jackson Hole.
Yeah.
I got some time, kids.
A little massage. Relax, take a load off.
Well, mani-pedi?
Yeah.
Maybe not. This is Bloomberg.
This is the Bloomberg Businessweek podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 3 to 6 Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.